Hey guys, so just about 1 year ago, I put £500 into this trading account. This is a stocks and shares ISA, and that 500 plus another 500 again in January. And that £1,000 altogether over the last 12 months has come up to now 1,987. In fact, to be honest, yesterday it was up over 2,000. When I saw it, it was about 2,050. Now, I'll just be honest, these are not typical results. I have done courses with some ex-Goldman Sachs traders and learned an awful lot about the market and how to trade stocks after doing very well in crypto. But now, if you were actually to follow me with this, then you would find that after year one, you've turned 1,000 into 2,000, year two into 4, then 8, then 16, 32,000, and 10 years on, you'd have made over £1 million. In this video, I'm going to show you how I've done that, how I've managed to double the value of my portfolio over 1 year, how you can do exactly the same yourself. Also, what I'm going to do is actually share with you just how well those stocks are doing now, or how badly they're doing now, and what it is that I'm going to do about it. If you're new to trading, what you probably do is what everybody does, and that's invest in stuff like Amazon and Facebook and all the usual stuff everybody does. However, when you get a little bit more advanced with your stock trading and start to use things like what Warren Buffett would use, which is the discounted cash flow model, to value a company to see whether or not it's really a good buy or not, you're going to find something like Amazon or Tesla or Facebook, any of the big major brands are massively overvalued. But of course, you don't want that. You want this. You want the massive 22,000% gain. But I'm not necessarily looking for those types of gains. Somewhere between the Amazons and the insanity in the stock market is what I'm looking for. So something kind of like this. So this is a semiconductor brand. They make semiconductors for cars and everything, and their stock price right now has been doing pretty well. Obviously, it all started kicking off towards the end of 2021, and they've been doing very well ever since. And what I base this on is going to be growth, so revenue growth and profit growth. So if you scroll down here onto the financials for this, you can see that the revenue growth, which is the little pink bit here, has been growing year on year from 2021 all the way through to this year. And also the profit, the net income, is also growing year on year. Now, if you have a look at this on the quarterly, you can see it's a little bit all over the place, but year on year, they are growing every single year. I like to see it around about 1/3 of those gross profits. So you've got 20 or 2/3 going into operating expenses, and then the other third to be profit. That I think is a very healthy margin. Also, with something like AEHR, when it comes to cash flow, you can see here that it is quite undervalued. So currently only $13, when the fair market value, according to this calculation, should be 17. So you've got a 24% sort of safety margin buying it right now at this price. It's a pretty healthy buy. Which brings us on to this one here, iPower. Now, iPower is actually a company which sells stuff on Amazon. So they sell lots of gardening type stuff. They're actually doing pretty good, and they just see this slow growth here. So it's just starting out, looking like it could become something later on down the road. And also precision drilling. So everybody needs a bit of oil and gas for energy in their countries, and it's got to come from somewhere, like these guys here that drill for oil and whatnot, and they are doing very, very well. You can see here since 2020, 2021, they've just been gaining all of this time, all of the last 4 years, up and up. And then over here, checking out how much money they're actually making, we can see that their revenues have been increasing year on year. And although a couple of years ago, they were making a loss, and then a smaller loss, and then just last year they actually made a pretty healthy profit like that of $300 million. And then finally, my favorite of the whole bunch, which is this one here called TaskUs. And TaskUs is a company which basically helps other companies through like online marketing and, you know, helping companies set up websites and that type of stuff, doing all the sort of outsourcing tasks that any company could possibly do. These guys will do all of those outsourcing tasks, and they have locations all over the world. You know, you look at this one here in the Philippines, and they have not one, but actually many different offices here. You got Cavite, Pampanga, Quezon City, Metro Manila, Rizal. So loads and loads of different offices, even in Bohol, which is a great location. Really great company, currently extremely cheap and getting cheaper according to this right here. But cheap does not mean it's rubbish. It means that it's undervalued. So just look how far undervalued it is right now. The fair market value is $40. And as you saw here on the chart, it actually came all the way down to $10. So an absolute bargain. So you could be wondering, is it because it's suddenly making a massive loss with this company, which is pretty solid, as you can see right here. So year on year, their revenues have gone up. They made a little loss there in 2021, but generally they are making profits consistently. If we go on to quarterly, is it going to look a mess? No, it's not. It looks absolutely fine. So their income is very, very solid. So they got solid sort of like rental income from all of that office space that they're renting out to small businesses. And obviously their profits are also extremely good. Look at their operating profit here, 100 million out of 324 million in gross profit. So very healthy margins yet again. A very, very good, healthy business. I don't see any problems with that fundamentally. What I do see on the chart though is a very, very nice, healthy buying opportunity if you want to buy something which is significantly undervalued. So now 30 days on, let's check out to see just how well we're doing. So the first one here, AEHR Systems, you can see that it was doing really, really well, but just recently, just from the beginning of November, it took a massive step downwards, which was really unfortunate. Just now you can see we're down about 5%. But if this here is 5%, then obviously we were up 5, 10, 15, maybe 20% up, but we just went down a lot. But why did we go down? Well, coming back down to the fundamentals, we can see here that annually looking really, really good, just growth year on year. Quarterly have struggled here. However, these results are for Q1 of 2025, so I'm not sure how they can already know the results of Q1 2025 since we're still in 2024. But down here on gross profit, still looking good annually. Quarterly also still profitable, but not that profitable for this last quarter of results. But again, it's Q1 2025 for some reason. Now, the quarter that we're in right now, apparently we're doing quite good. So I don't see what the problem is there. So I don't know why it's gone down. Am I going to sell it? Probably not. I'm going to wait out, see how it goes through January, because fundamentally it is still a good stock to hold. Now this one here, iPower, I do quite like it, particularly going on to sort of January, February next year as we get into this sort of when people going to start using this type of stuff and growing their own fruits and veg and whatnot at home. So I do like it, but right now it is down quite a lot, and you could be looking at selling it off. I wouldn't blame you if you were to sell it off. I should probably sell it. And having a look down here at the financials annually, nothing at all like the last one. This is one of those ones which crept in last month just because I wanted to do the video. So it's not done particularly well. As you can see, it doesn't make particularly good profits. However, just recently, I can't remember what it was in the last video, but I should imagine it looked better than this. So not looking particularly great. However, quarterly, it was down. More recently, it is up. So you can see down here as well on the breakdown, you know, we are up right now. So that is profitable. So I don't see why all of a sudden the price has been going down. So hey, I know right now things are looking pretty bad for the portfolio of 4 coins picked last week, but let's continue to see how it goes. Now, precision drilling. This one is actually up, so this one's up 2.67% right now. And with the drill baby drill going on in America, I should imagine this one is standing to be doing really well coming into next year. So definitely going to be holding this one. And then my favorite, which was Task Us, which I did say was my favorite. Maybe I should have only gone with my favorite. And this one has been up tremendously good. So this here says it's up 33.68 right now. Just this one stock alone has saved the entire portfolio. So despite these two going down, and as I say, this one was kind of on the fence. I just got it because I wanted 4 for the video. And now this one has done tremendously well. In fact, it was up even more than this last week. But yeah, we're up 11.37%. Now, if you can be up 11% every single month of a 12-month period, it's pretty easy to see how you can double your money over 12 months. And I know this is a really short video, and I obviously haven't put all of the knowledge that I have into this teeny tiny little video. It's just a little snippet of my thoughts and mindset. But if you do want to know more about how to actually trade stocks successfully and make these types of gains yourself, then you can head over to the link down below in the description, which goes to my link tree. And at the top of the link tree, you're going to find this 20% off the ITPM course with the Institute of Trading and Portfolio Managers. This is the guys that I partnered up with on this course. In fact, I paid the £3,500, I believe it was. There you go, $3,500 to do this particular course. But you're not going to pay that because you've clicked on the link in my link tree. You'll get 20% off of that price yourself. After having gone through all these excruciatingly painful videos, which are absolutely packed full of knowledge, there is an exam at the end, and I really do wish you all the best on that. But my goodness, by the time you've gone through all of these, you are going to be a stock trading wizard. That's it for now, and I see you again in the next video.